In a space full of whales, I'm the crypto trend shark. When you close your eyes to pray, I'll be waiting in the dark. You were wishing on a star, I was building us an ark, and I saved you a seat with the crypto patriarch. You were loading up your bags, I was dumping on your face. Keep talking about the moon, Critty put you in your place. Now the blood is in the water and your brain's in outer space. You were all in on it too, and I'm a motherfucking ace.
Good afternoon, Mr. Bond. Welcome back. Much has changed since we last spoke. It would appear that my predictions were correct. Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Just a couple little quick excerpts for entertainment purposes only, as I do like to have a little fun with this channel. As you can see from my last live stream, I was correct on literally every asset we took a look at. I'm just going into Bitcoin and doing a quick little update today. Going to keep this short, and then we will still have our scheduled live stream on Thursday, and I may do a short update as well tomorrow. So, but dollar is showing strength once again, pushing up. Treasury yield is leveling off, consolidating at the current level, just like we expected. We are seeing quite a bit of weakness throughout basically every market in existence right now. Everything from gold and silver are selling off, finding resistance at the key levels that we had pointed out. All the traditional markets are selling off, with the exception of basically Apple, which has pushed up and is potentially confirming the channel breakout. So we'll have to see how that plays out. But literally everything else we've looked at, from like commodity sector, including pot stocks, metals, everything basically, mining stocks have all shown weakness and are selling off. We're looking at our key levels. Tech sector is showing weakness after the small bounce that we had anticipated, and of course cryptocurrency has rolled over and showing quite a bit of weakness as well. So we're going to take a look at Bitcoin and just kind of go from there, and then we can kind of extrapolate out the price action throughout the remainder of the markets. Full disclosure, I am in a short-term scalp position on Bitcoin to the upside. I have closed my short position. In the meantime, basically, we'll get into exactly why I took that position and what made me take this position, and what I see in the charts right now. But essentially what we're looking at is I have just traditional indicators pulled up right now. So if you're not using my indicators, we have the traditional stochastics, traditional RSI, and traditional MACD. And we're going to talk a little bit about divergence and how to use it both to the upside and downside. In the previous video, I spoke specifically about the bearish divergence taking place on Bitcoin. In the daily, we had 2 or 3 drives of bearish divergence, as well as the weekly. After that, we basically got a continual sell-off of about 10%, which was fully expected. So I'm going to talk just a little bit about exactly how I knew that was going to happen, and how I used that same divergence to enter a long position as well. So basically what we were paying attention to is the potential that a internal 5-wave structure was taking place. We had previously put in a solid wave right here, followed by a correction. That was essentially our move from like the $30,000 range up to the $58,000 range. We then pulled back down to $42,000, at which point in time we developed what was looking like a 1 up to $52,000, a 2 retracement along this green trend line that was starting to develop, followed by the 3 push up to $62,000, and then a 4 retracement slightly above the 1, and then we're expecting potential for a breakout back to the upside to put in our 5. Now what we did notice is that breakout was failing to take place. We were losing strength at a lower high, and we had found an internal retracement 786 of our previous sell-off from 62,000 back down to 53,000, at which point in time we appeared to be topping out at the 786 retracement, the bullish retracement of the bearish dump. We came down and found support multiple times on the green trend line that was starting to develop, and it looked like we were getting ready to basically double top at that 786 here and sell off, at which point in time I entered my final short position. We did break down from that green parabolic trend line, and once we did, we were paying attention to the short-term white parabolic trend line that I have here in place, and from that we had a low, another low that was higher again, and then a third low that was higher again. We started to consolidate at that level, and it became very clear that we were getting ready to sell off and lose that level. Now the next level that we were paying attention to was this blue parabolic trend line here on top that had performed basically our support all the way back from the $17,000 level. That was our low at $17,000. That was our next low again at $29,000, and now here $29,000, and then it was our low once again at $43,000. And as you'll notice, we have come down to it now, and we broke down from that level here at $55,000, and we're now pushing back up and attempt to retest it. And you'll notice here I have a short-term descending trend line in place, depending on what time frame you're looking at. It's slightly off on the 4-hour. I have drawn it on a shorter time frame, but essentially that was a top, that was a lower high there, and then now we're pushing back up, and you'll notice that comes into confluence at the same level as our blue line, and we would expect to find resistance at that level around $56,000, $56,150 or 200. So we're expecting a temporary potential pushback up, but you'll notice also that we have another support line in place here at 56.7, once again at 56,000, and then that came into line specifically with the exact breakdown point that we had from 55.5, and then we came down, and all we did was retest our previous bottom that we had Fibonacci down to. So when we Fibonacci'd from the high at $62,000 down to our low at $52,275, that was our internal retracement that has been taking place. We topped out at let's talk about the way back up. On the first part of the way back up, you'll see we touched the 382, sold back off, then we came up to the 0.5, then we sold back off, then we came up perfectly just shy of the 786, at which point in time I told you I expected us to come back up higher and tag the 786. We then tagged the 786, sold off down exactly to the 382, came back up, touched the 786 again, came back down after that, slightly shy of the 236, came back up again exactly and found resistance at the 618, sold off exactly down to the 236, came back down and touched the 0 right there, at which point in time I entered a long position. I entered that long position because of a short time frame scalp. Let's go down to the 1 hour and talk about the divergence that was taking place on the 1 hour. So you'll notice here that we got a pretty violent sell-off right down here, followed by a slightly higher low on our indicator oscillators and a slightly higher low on price action, at which point in time we came up then, and then we put in a high right here, and then we put in the same high here on price action, but we put in a high here on stochastics with a lower high on price action, a high here on RSI with a lower high here on the RSI, a high here on the MACD with a lower high here on the MACD. So that is bearish divergence. It took the same amount of or less energy to reach the same height, at which point in time we started to violently sell off again. So we used that bearish divergence to confirm that we were going to see price action to the downside, at which point in time we came down here and we put in this low right here, almost a double bottom. We bounced up and then came back down, and you'll notice that here on our indicator oscillators we put in a low followed by a higher low. That was on the stochastics. On the RSI we put in a low followed by a higher low on the RSI, and then here on the MACD we put in a low followed by a higher low on the MACD. But here on price action we put in a substantially lower low, which was at the 0 point of our previous sell-off, essentially taking this from what was considered to be an internal retracement from the top of the range to the bottom of what could have potentially been the 4 down to the just below that 4. So now it's no longer internal. The retracement was internal as long as it remained from that high to that low, but now it has broken out through the bottom on a candle close 1 hour as well as a wick on any time frame. So what we're expecting now was this bullish divergence between these 2 points that played out on all 3 of our indicator oscillators to play out and get a pushback to the upside. What we were expecting for the potential push was the target that we've already hit at 55,300, at which point in time one of 2 things will happen. It looks like we're potentially developing a inverted head and shoulders pattern, retesting our breakdown resistance, our support as resistance now, and that we could potentially come back down to like 54,000, 53,800, find support, and then get a bounce back to the upside exactly at that 236, followed by the measured move of this small head and shoulders pattern that we have put in here, or inverted head and shoulders, I should say. That is a potential scenario that would give us a temporary relief rally back up from where we're at now through the break of the neckline all the way back to check some of these prior support turn resistance points and the 0.5 Fibonacci level at 57,250. There's a very high likelihood that that will in fact fail. We could either get continuation directly right now to the upside, or we could come back down here, fail to find support at our green level, and then continue to sell off. So I am raising my stop loss accordingly and playing the market. But at the time, this is in a, I think it's about a 3% profit right now, which 5x leverage is about 15% on my position. So not a bad little scalp move. But again, I'm overall not ready to get bullish back in these markets at the current time frame, as we have lost a key trend line, a key level that has been support, basically going back to, let's keep going back here. I'm on the 1 hour, so going all the way back to December 11th. So this was our previous support, for at this point in time, 4 months, and we have just lost this. Now, is it possible we get a situation like this where we lost that support and then we push back up? 100%. And if we do, I'll be positioned for that accordingly. But in the event that we do not push back up, we find resistance and continue to sell off, I'm still in my short position as well, and I would expect continuation to the downside. We are topping out here on the shorter time frames. We're topping out here as far as resistance, and I would expect at least a temporary sell-off to the downside, which point in time I'm going to look at the longer time frames. Now let's zoom out here a little bit and pay attention to what's going on in the longer time frames. From our previous low right here, which was down at 28,700, to our high at 62,000 here, I've put another Fibonacci in place. That's this one here on the right. And you'll notice that on the initial sell-off here, we came down basically just shy of, we're going to not look at that big one yet. We're going to look at this next one in line, which was the $42,500 Fibonacci up to our high at 62,000. And when we sold off initially, we came down to this 236 level, sold off through it and touched the 382 right here, pushed back up and found resistance now on the 236 level here in red, and then broke back through it. And that's when we performed our internal retracement, came back down, found temporary support on the 236, attempted to move to the upside, put in that bearish divergence and sold off. And now here we have come down exactly again to the 382 once again. So now what I'm paying attention to is on this internal retracement, that's taking place right here on the 3, what could have potentially developed into the 4 retracement followed by a 5, which is still possible at this time. But we need to pay close attention, because now if we sell off much lower, we will take out this 1 and invalidate the structure. Also, the amount of time that has taken place on this retracement wave, basically from mid-March to current times, is essentially now the same amount of time that took place on what would have been this potential wave 3. So I don't like to see that. I like to see the wave to be at least twice as long as the retracement, the wave to be at least twice as long as the retracement. Now the retracement is in jeopardy of being as long or longer than the actual wave itself. So it's starting to look like this is no longer going to be an internal retracement, and we're going to sell back off and potentially endanger the 5-wave structure. Also, if you pay attention now here, that 382 has established a neckline. So we have a top right here, atom, coming down to that neckline again. And then we have an eve, a rounding top, just slightly high, the 786 of that same move. And then we've come back down here and touched the neckline again. So in the event that we get a break of that neckline, I would expect the measured move from the neckline to the top to play out to the downside, at which point in time that move will take us down from our 382 all the way down to the 886 of that move, or potentially taking us down to the 382 of that macro fib that we were paying attention to. So my next target to the downside is going to be somewhere around like that 46,000 range, at which point in time we're starting to endanger the structure, not only that's taking place on the shorter time frames, but also we'd be retesting that high of like 41,000 roughly. So if we start to sell off here, I'm going to pay close attention to, are we going to come back down to like that $38,000 to $42,000 range and potentially retest this previous resistance as support. So it's very important that we pay attention to this and you know, how the market is developing accordingly. So just to kind of put like that into perspective, if this is our atom forming right here, we have a peak with a neckline in place right here. This would be our atom, our sharp peak, and then you'll notice also that we have a eve, basically, excuse me, that we have an eve essentially taking place right here as well. So the eve is slightly lower than the atom. So here we have our atom top, a sharp and pointy top, and then we have our eve, a rounding top to a slightly lower high. And now here we have a well-established neckline, clear support here at the exact range of 53,750, which we now came down to once, came down to a second time, and we're potentially putting in another lower high. If we come down and consolidate on this level again, I would expect a break to take place, and that break is going to be our measured move from the neckline itself to the top of the atom point right there. So that's what I'm paying attention to right now. And then in the event that that breaks down, that would take us down to our 382. You know, I would expect some temporary support at the 236 of that macro fib. But, you know, essentially looking for this level right here. And then once again, what we're looking at is a potential neckline being established from this previous high, from this retracement down to 42,000, and then once again we'd be coming down to potentially 42,000 as well. And I would be paying attention to, on longer time frames, are we going to take out this close? So if we switch now back out to like a 4-hour time frame, you know, I would want to see, are we going to come down on our 4-hour lower than our closes here at like $47,000, or are we going to come down here and put in a potential higher low than this like 42,600? If we put in a higher low and continue to the upside, I could stay bullish on these markets. You'll also notice that we have a long trending parabolic trend line from our low back here all the way in October. This is the second blue line I have in place. It acted as support here. We broke down slightly below it here. It acted as support here, and now we're coming down. And if we get this measured move, we'd be coming down to potentially retest that as well. If it holds, we could get continuation to the upside and potentially retest this key level that we pointed out in our previous live stream. If it breaks, I would expect a potential retracement of what would appear to be now an even larger topping pattern, which would be that neckline support / resistance here at 40,000 roughly. This peak here, the previous peak at $58,000, and then once again neckline support here, and then a peak here at $62,000. And then if we get this move down here, it's just going to look like a giant version of the same pattern, a double top, one top here, neckline, two tops here, neckline. Now, does that have to happen? No, there's still a bullish case to be had from those levels, which I pointed out in that live stream. But again, if we come down to that area, it's going to start looking dangerous, like we could potentially bottom out here temporarily, come back in and put in a lower high around the same $57,000, $58,000 level, and then this would develop into what would be a left shoulder, neckline, head, right shoulder, neckline, right shoulder, and then that would be the retest of the breakdown from this key blue fib level that we were just pointed out. So we would then have a left shoulder, neckline, head, neckline, right shoulder, and then neckline test again, and then we could potentially get the measure move breakdown from that level. Now again, I don't want to get overly bearish on this at the time, as there is still a bearish case scenario, a bullish case scenario that could easily play out. But, you know, a potential breakdown from that neckline could result into a move back down to $20,000, which would retest the previous all-time high, at which point in time we would have come back down to retest a key level, and then we would have to really pay attention to, is structure being broken? Because right now we have another key support level in place. I'm going to switch out one more time to a longer time frame. We have another key support line in place on the daily from back in March when we capitulated 1 year ago. We found support there at $10,000, and that was when we put the line into place, and then we went parabolic since then. So now a potential retest back down to that level would bring us in somewhere around like the $25,000 to $30,000 range, at which point in time we would have one touch, two touch, three touch, and we would have to pay attention to, do we validate or violate that parabolic trend line, and then potentially end this market cycle and come back down here to one of these extremely bearish targets. And that was in fact the end of the 2019, 2020, 2021 bull run. So paying close attention to that, and those possible scenarios to play out. Obviously, I outlined the potential bullish scenario as well if we found support around that $42,000 level and continue to the upside, or if we come down even to as low as $20,000 to $25,000 and then continue to find support and continuation to the upside. But all those things are potential, as well as just finding support right here and continuing to the upside from where we're at right now. But you'll see how I've identified that clear bearish divergence that took place on the longer time frames here on our indicator oscillators. I've identified short-term bearish divergence here, as low as the hourly, and then identified, short-term bullish divergence on as low as the hourly as well. And I've used all those divergences, trend lines, and key Fibonacci levels, as well as moving averages to validate what I'm looking at here. So I just wanted to do a short market update specifically on Bitcoin, and just talking about how essentially everything had played out exactly as we expected, with the exception of Apple, which has potentially broken out of the downtrend and is now showing strength for potential continuation to the upside. We'll have to pay attention and see how that plays out over the next day or two. But right now, all the markets have broken down. Everything is showing extreme weakness, exactly as I suspected. The dollar is showing extreme strength, and if we push up another 0.3%, I would expect it to break out to new highs and, touch our 200 exponential moving average and 200 simple moving average. 10-year has consolidated at the 8 moving average on the daily, and again, could potentially find a, support area right here and move up to the 2% interest rate, or, even come down a little bit lower and retest the top of the channel breakout and just put in another consecutive higher low. So everything's playing out exactly accordingly. Just did a quick little, joking around Mr. Bond skit, as well as I think I'm going to throw in an old school little throwback from a couple years ago or last year, little Crypto Shark video at the beginning here for entertainment purposes only. But, just wanted to do a short little update. I know you guys enjoy the static videos. I'm going to leave it to just crypto on this one and just a little verbal, TA on some of the other markets. But we need to pay close attention and look for those levels to be hit, on commodities, not only precious metal cycle, but our pot stocks, all the energy sector, all the other, indexes that we've taken a look at as well. If you haven't watched a previous video, the live stream, I encourage you to turn it up to 1.5 or 2x speed and, at least pay attention to the key commodities or key stocks or cryptos that you do like. And once you've checked that out and you realize how I've come to, these quote-unquote predictions and how the market has played out accordingly, hopefully you can learn something from them, and hopefully you'll be able to tune in on Thursday for our next live stream, which will be 8 p.m. EST till 10 p.m. EST. And if you have any specific stocks, commodities, cryptocurrencies, or basically just anything I can pull up on a chart, I'd be more than happy to do so. I do appreciate all the positive comments. I encourage you to check out the description of the video and use my own personal indicators. Or if you don't want to use those specific ones, they are all free. You could just pull up the standard stochastics, RSI, and MACD, all of which have just your stock settings from TradingView on here, and use those instead. So there we have it. Just a quick little afternoon market update. Crypto Trend Trader. Appreciate all the positive support. Likes, subscribes, make sure that you share this video with your friends, and tune in for our next one. I will possibly do a short market update tomorrow and take a look at some other assets, but I'm going to keep this one relatively short for those people that like the 15 to 20 minute videos. So Crypto Trend Trader, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly, and I'm out of here.